All right. What's going on, everybody? So we're going to be jumping into the video here shortly. I just need to get my statistics pulled up, and we're going to be looking at what's happening in the market. So we're seeing some big shifts. The market has started to turn, and so far, we're not seeing that there's going to be, I mean, there are price drops happening here in the Utah market, but there are more importantly, the buyer demand has dropped off really. So over the past couple months, we've seen interest rates go up. It's now May 3rd as of today's date, and interest rates have gone up quite a bit over the last, I'd say probably 2 to 3 months, give or take. And we're really seeing that that's starting to take an impact on today's market. If you look back about 3-4 months ago, interest rates were at about 3%, maybe 3.25%. And now today they're sitting at about 5.25% to 5.5%, depending on what type of loan you're getting. So there's obviously a big drastic change there. In theory, for every 1% interest rate change you see, you should see a 10% change in the amount of in prices. So if interest rates go up 1%, prices should theoretically come down 10%. Now, that's not exactly the case of what we're seeing here in today's market. I do want to go ahead and share my screen here in just a second. Let me do this and let me do this. And we're going to get this set up here so we can actually take a look at it. So we've got the market statistics. Let me go ahead and share my screen so that everybody can see. Share screen. And I got to approve this. Sorry, guys. Thank you for your patience. All right. So that's not working. We lost permission on sharing the screen. So I'm just going to read off the statistics that I'm seeing here just to save everybody the headache here. So in the month of March, we saw a median price of $520,000 as this median sales price. This was 4% above the actual listing price on average. So a home was listed at $499 and actually ended up selling for $520,000. So we were looking at 4% in March. And then in April, we actually saw the number of home sales decrease, which is really concerning because going from March to April, we should see those numbers actually go up. But the number of sales that we saw happen was actually about 150 less than we usually see in that month from March to April. However, prices continued to climb up. We saw median list price at $505,000 and the actual sales price was $530,000. So still selling for 5% above the asking price. So the interesting thing about this here is that we're seeing the demand on showings and the demand on buyers in the market start to drop off and go down, but we are seeing prices continue to remain flat, or even continue, right? If we look at April's data, we're really looking at offers that were made in March because it generally takes about 30 days to go through the process of buying a house if you're obtaining a loan. So for anybody who made an offer in March, they're now closing in April. So if we look back to what the market was like in March when those people locked in their interest rate, rates were still, decent back then. They were, probably in the high 4% range, but now they're up to 5.25%, 5.5%. And this is what's making a big difference in today's market. So for instance, I just talked to another friend of mine who's a real estate agent. He said he's got a house listed in Magna, and it's been on the market for almost 2 weeks, and he doesn't have any offers. And that's kind of crazy because that's an area where you'd expect to get offers right off the bat. So that's really interesting to see. I've got a couple listings that I've listed, and we are used to seeing, 6 months ago, we would have had 10, 15, 20 showings the very first day. And right now, we're lucky if we get 1 or 2 showings. So the buyer demand has really dropped off, and it's in large part due to the rising interest rate. So how is this going to affect you if you already live here, if you're looking at making a move here? What does that mean for you in this market? Well, is it better to buy? Is it better to rent? Honestly, there's a lot of things you got to look at. I'll be honest with you right now. Buying maybe is not the best decision. Buying might be something that you want to do, but you need to be prepared to be paying a little bit more. Honestly, if you're looking at, let's say, a 4-bedroom house, kind of just your average, run-of-the-mill house in one of the suburbs here, you could probably rent that house for about $300 to $400 less than what your mortgage payment will be. So unless you've got a big chunk of money down, and you really want to purchase, honestly, as far as like just a straight up financial decision, renting might be better for a year. The only thing that's hard to know about that is the market going to continue going up? Will interest rates come back down? Are interest rates going to go up? Right? There's a lot of unknowns in the market. So you may still want to look at buying and look at what's happening in the market and say, hey, I'm going to be in this market for at least 3 to 5 years, maybe even more. If you're holding on to a house for the long term, then I definitely think that buying is the smart decision, because you're going to be able to lock in all of the tax benefits that come with buying. You're going to pay down the loan on it. You're not paying somebody else's mortgage. You get the security of having your own house. So from a purely just like, hey, what's my monthly payment standpoint, renting's probably cheaper, but there are still a lot of benefits that come to buying. So it just depends on your own individual situation and what you're looking to do. On that note, guys, if you have questions, make sure to drop them in the comment box. We'll be going into the comment section. We'll be going into some questions here, and doing kind of a little Q&A here. So with what we're seeing in the market, we talked about buyers, how that's going to affect people that are in the market. Let's say you're a seller. Let's say you're in the market, you're watching what's happening with the market, and you're thinking, hey, is now the time to sell, or should I hold on? Well, if you've got a place to sell, or if you've got a place to go when you do sell, then you might be in a position where selling now might make more sense. However, that depends on what you're expecting the market to actually do over the next 6 to 12 months. If interest rates continue going the way that they are, which I personally believe they will, I think we could honestly see 6% within a couple months, then it's just going to get harder and harder for buyers to purchase homes. And that may reduce the number of buyers who are interested in your property. So if you're looking at selling a property, you may want to do it sooner than later, unless you're going to, again, hold out through the market, hold on for the long term, and get to the point where, the market turns around again and there's more buyers in the market. It's been a seller's market for so long now that we're really seeing a big shift in how much activity is out there. And that's the thing that I think is most surprising, is how quickly it has dropped off. So, yeah, let me know what you guys' questions are. I've got a lot of thoughts about this. I want to talk about investors for a minute as well. So what we're seeing with real estate investing, again, interest rates have gone up quite a bit. And we're now seeing that a lot of properties do not make financial sense for these investors. So there's been a lot of investors over the last couple of years, especially for duplexes and triplexes and fourplexes, all these different property types. People are jumping into the market because their interest rates are so low that it just made sense to lock in at that low rate. However, things are shifting now, and interest rates are so high that a lot of these properties don't even cash flow, even with 25 or 30% down. So it's a little bit crazy to look at this and think, that investing is the numbers on investing just don't work right now. And that's the harsh reality of the market that we're looking at. And that actually leads me to the next thing that I wanted to talk about. We'll have a video specific for this coming out probably in the next week or so. But talking about rents. Rents are going to be going up a lot. I think that, in my own personal opinion, I think rents will easily go up 10 to 15% over the next 12 months. For these reasons, right? There's going to be a lot of people who are falling out of the real estate market because they're no longer able to buy because it's gotten so expensive. And you're also going to have a lot of investors who own property and are saying, hey, I want to buy this property, but I can't do that unless the rents go up higher. And I need to, kind of push those rents as high as possible to have this make financial sense. So I think the two main drivers behind rents going up over the next couple of years is, one, prices have already gone up so much that now rents have to follow. And then second, it's gotten so expensive to buy for investors, and even just for, like, let's say your first time home buyer, that a lot of them are going to be priced out, and those rents have to kind of go up either due to demand for those rentals, or the actual increase that landlords want to get for their rental property. So I expect rents to go up pretty drastically over the next 12 to 18 months. I don't think that, in my personal opinion, I think prices are going to stay mostly flat. I don't know that we'll see these big, massive price drops. There might be a chance that we see prices come down 2, 3, 4%. But I don't see a big crash coming, at least not right now. That's just not something I'm seeing. There's still so much demand for Utah overall, even though the demand has dropped. there's still a lot of demand out there. And I think that that's something that is going to remain just because of all the opportunities we've got here. So the last thing I want to talk about, and then we'll answer any questions if there are any. If you've got questions, just post it in the comment box and I should be able to see it. So last thing I want to talk about is new construction. So I've had a couple of people reach out to me lately saying, Cody, I'm thinking about buying new construction. Should I lock something in now? What are the pros and cons of doing this? And the best thing I could say with new construction is just be very careful. If you're looking at new construction right now, you're kind of in this perfect storm where things are really against you as the buyer. I'm not saying it's not the right decision for you, right? There's always somebody out there who's going to say, hey, a brand new house is what I want. I'm willing to pay a premium for it, and they'll make it happen. But for your average person on a purely financial basis, going out there and buying new construction right now is extremely risky, at least in my perspective, because you've got a couple of different things that are coming into the market that are going to really shift what that actually looks like. So supply chains are getting alleviated a little bit. The cost of building is still very expensive due to labor shortages and the cost of labor. But these two things are kind of counteract each other, right? So even though the supply chains are coming down and they're getting more flexible and those, things are not as backed up as they were, builders are still going to have to overpay in order to build that house. They're still going to pay more for the contractors, pay more for the materials. And, ultimately because of inflation, everybody's getting killed right now. That's going to then get passed on to you as the end consumer. So if you're the buyer looking at new construction, you're going to pay a premium for those reasons. And that might be something that, you don't want to do. Going beyond that, you're also looking at a position where you're not going to be able to lock in your interest rate for 6, 9, maybe even 12 months. And by then interest rates might be another full percent higher than they are right now. So that's something that's kind of a concern for me, is if you're looking at the market saying, okay, I can afford this house with a 5% interest rate or 5.25%, but can you afford that house, or do you even want to purchase that house if interest rates are at 5.75 or 6%? That's going to be a much different scenario. And there's going to be a lot of, that's going to make a big difference on your monthly payment. So for new construction, all I can say is just be careful. You're going to pay a premium when you actually go out there and buy the house. You always do for new construction. It's kind of like buying a new car. When you buy a new car, you get the pleasure of, having a car that nobody's owned. It smells great. It's brand new. It's in perfect shape. But as soon as you drive it off the lot, you do typically lose value. And with new construction, it's pretty much the same thing. You get the benefit of having a brand new home that's, perfect for you, and you got to pick it out. But you are going to have, you are kind of at the mercy of the builder and the market overall. So you're generally going to pay about a 5% premium for new construction in today's market. So real quick, I'm going to jump over here on my computer and pull up some information on what's happening in certain little pockets that I do a lot of business in, because I think a lot of people are probably looking in these areas, and I want to get dialed in on what this actually looks like. So we've got a couple of, I'm going to pull up some statistics here and get some information on these markets. So we talked a little bit about the numbers just a minute ago, but the important thing to know is that any homes that sold in April, which is the last full month that we've got data on, the offers on those homes were likely made either at the beginning of March or the end of March, or generally sometime in between there, maybe even the beginning of April, and then it closes at the end of April. But looking at this information here for the southern end of Salt Lake County and the north end of Utah County, so this includes cities like Lehigh, Saratoga Springs, Eagle Mountain, Draper, Bluffdale, Sandy, South Jordan, Harriman, and Riverton. We saw a total of 697 sales last month. The median list price for all home types, single family, condos, townhomes, everything across the board, was $572,000, which was up significantly from March, where it was only $538,000. The sales prices between those 2 months, in March, it was $568,000. This is on a median basis. And in April, it was $600,000. So this is roughly 5% over the asking price that these homes are selling for. So if you're in a good location, if you've got a unique home, homes are still selling very quickly. And over the past couple months, they've still been selling for way above the actual asking price. And that's something that is going to change as we move forward. I think we're going to see a lot more price drops, and I think we're going to see this number come down pretty substantially here in May. It'll be interesting to see what this looks like because I've already seen a ton of price drops. I'm seeing people get homes for less than the property is being advertised for. So if they're asking 600 and maybe it's selling for 590, 595. And I think this is really going to skew those numbers back to a more, a more level basis where, homes are not selling for way above and they're not selling for way under as if we were going through a crash or anything like that. So we've got a couple of comments here. So I'll jump into this. Again, like I mentioned, if you've got a question or comment, concern, anything like that, drop it in the description box or not in the description box, in the comment box, and we'll talk about that here. So Ben, you've got a question about inventory. So with buyers dropping out of the market and rates rising, is inventory starting to rise as well? That's been something that's a really good question because that's been a concern over the past little bit. And so far, we're not seeing those inventory numbers come up. And I think it's for a couple of reasons. I'm going to pull up the absorption report, which shows us what those numbers look like and see if there's been any shift in the market. So we're actually not seeing inventory really come up as much as we need to. And that's because I think a lot of sellers are looking at the market saying, hey, I might want to sell my house, but then where do I go? Right? I've got to go buy something. And that seller, if they bought sometime in the last 5 to 7 years, they're probably sitting on a lower interest rate than what there's available today. And, so they're kind of looking at the situation thinking, okay, I'm going to sell my $500,000 house and I want to upgrade. I'm going to go buy a $700,000 house. But then not only is the house more expensive, but now interest rates are causing my payment to be substantially higher than it was before. And it's kind of just a snowball effect that really puts us in a tight spot because inventory is not really going up like we would hope. Inventory is actually down over the last 2 months when compared to the last 3 or 4 months. I do think that this is, that's looking at past data. Inventory numbers today, it's a little bit hard to pull that information up just because it does change on a daily basis for what properties are available, which ones are under contract, and then which ones actually sell. So I haven't noticed any change in inventory. If you're a buyer in this market and you're looking at what's available in the market, I'm still hearing from a lot of people that, they come to me and they just say, hey, Cody, there's like nothing out there. I'm looking in South Jordan for a house in this price range, and there doesn't seem to be a whole lot that's available. I mean, you might get 1 or 2 houses per week, and that's kind of it. It's that way for $500,000 price range. It's that way for $1.5 million. I've got a client that's looking for a house at $1.5 million, and there hasn't been anything for the last 2 months. I mean, there's been some listings that have come up, but generally, definitely not enough to, I think satisfy the demand that's actually in the market despite everything that's going on. So hopefully that's helpful, Ben. The interesting thing too is that, I mean, honestly, things have gotten pretty expensive, even for condos and townhomes. That's something that we don't talk about a whole lot here on the channel, but we've seen the same thing for condos and townhomes, generally speaking, because those are at the lower end of, the entry level, right? Where people say, hey, okay, I can qualify for a $300,000 loan or 400,000. They're going to go with a condo or a townhome just to get started. And we've really seen the prices get pushed up on those. And I don't expect those really to come down anytime soon. I could see single family homes, especially in the 600,000 to 1 million range. I could see those go through quite a bit of price drops, but anything that's under about 600, I think is going to stay really strong. I think there's going to be a lot of demand for those types of houses. Just because of the price point that they're in, there's going to be people who are always looking to get in and looking to buy or sell for a specific reason, right? Sometimes people want to buy because they say, hey, I'm going to be here for 5 years. I'd rather buy now, even though it's not the best situation. I'd rather buy now than rent and have to face, a landlord and rising rents and having to move potentially, after a year or two. So I think a lot of people are still going to be looking at getting into the market and, making purchases, and there's still going to be people who are looking to sell as well for one reason or another. Maybe they got a new job. Maybe they, got money from grandma and now they want to buy a bigger house because, they can. Or maybe, there was a death in the family. I don't know. There could be a number of different things why people would want to sell. The list is endless. And I think there's always going to be people who are looking to make a move. So, Yeah, guys, let me know if that's helpful for you. I don't see a ton of comments here, so we'll probably just continue. I'll probably just continue on here for another couple minutes unless somebody's got questions. But that kind of covers the market and what we're seeing here today. If you're just jumping in, drop a comment down below, or go back and start the video, and you can actually kind of watch the statistics that I talked about and what we're seeing in the market and what I expect to see going forward. So I do think we'll see some big changes. We're just at the very beginning of it. The thing that you have to note is that there's going to be a couple months of lag time before we actually start to feel see the effects on a statistical basis of what's happening in the market. So for me as a real estate agent, I'm out in the market every day, showing numerous homes every single day, writing offers, helping sellers get their home on the market. And I'm already starting to feel the impacts of this market, which is good. If you're a buyer in this market, I mean, other than the rising interest rates, now is like a better time than it has been in the last 2 years to be a buyer because there's not a ton of competition out there. So yes, it's going to be a little more expensive, but it's going to be a lot easier to get into a house than it was 3 months ago, 6 months ago, or even over the last year. So I think that's a good thing for buyers. Sellers, I think prices have gone up so much that a lot of them are sitting on a ton of equity, and we'll see. I think as long as there's not a rush of new sellers coming into the market, I think the market is going to stay very strong. I think it's going to stay very stable. And I think prices will kind of go flat for the next little bit. Charles, you've got a comment here. Yeah, thanks, Ben. Charles, your comment, maybe in a few months, the prices will drop a little and inventory will come down. Yeah, that's a good question, or comment, I guess. So yeah, maybe in a few months, prices will drop a little bit. I think that there's a good chance that prices will maybe come down 1, 2, 3%, but I don't see them going down more than 5% across the board. There'll be some houses that definitely go through price drops of 5, 10, maybe even 15%. But that's because they're way overpriced to begin with. They're just kind of shooting for the moon, hoping somebody will, offer on it, and they're just never going to get that price. So I do think there's a chance that prices will come down slightly. But as far as inventory coming down, maybe you meant to say inventory going up. Inventory, I think, will probably stay pretty flat. I honestly think that it's going to be at a spot where it has been the last couple of years, which is kind of concerning because that means that we're not seeing a lot of sales in the market, which is tough for buyers because there's not a lot out there to choose from. And it's tough for sellers in the market as well because they don't have anywhere to go. And, they're facing these rising interest rates. Charles, interest rates are not yet in the 6% range. I mean, for some loan products, they are for sure. But for your standard conventional loan, VA loan, FHA, you're looking in the low 5% range right now. I've seen anywhere from 5% to 5.5% in today's market. So not quite at 6%. I believe the Fed is supposed to meet tomorrow, and everybody's expecting them to raise interest rates another 0.5%, or 50 basis points. So that's already kind of baked into the market. That's not going to directly affect the mortgage market, but it will. It is already kind of expected, and so it's already baked in to some extent. But I think it's going to impact it even a little bit more. And I think that getting into that 5.5% range on interest likely over the next little bit. So hopefully that answers everybody's questions about what's going on in the market. I'm seeing a lot of activity, a lot of price drops, a lot of people trying to hurry and get to the market to sell because, some people are thinking, hey, we're at the top of the market. Now's the best time to sell. I don't know that I necessarily believe that. I'm personally still trying to buy anything that looks like a deal. I'm a real estate investor. I'm looking at buying real estate. If something makes sense, if it's a good enough deal, I'll definitely buy it because I'm here to hold on for the long term. I still think that within 2, 3, 4, 5 years from now, or even 10 or 15 years, the Utah market is so strong. It's going to be incredible. I think some of the numbers that we see is really going to shock people. We've already gotten pretty expensive and we're no longer, a cheap city to live in as far as housing is concerned. And I think it's only going to continue on that route. And we'll start seeing rents that are, $2,000, $3,000, maybe even $4,000 a month to live here in the city, depending on the house and size that you're looking for. So I do think it's going to continue to get more expensive. And obviously, if you own real estate, that's a huge benefit for you, right? Ben, you're considering moving to the area. Are there certain areas in Salt Lake County that would be more insulated if we see a correction? Yes, absolutely. So if I could get my screen share to work, I would actually just go ahead and do this, but it's having some issues and won't let me screen share. So I apologize for that. But definitely there are some areas that are going to be more insulated than others if a correction comes. So like I said, I think kind of those entry level homes are going to be protected at least to some extent. And I don't see those dropping very much because there's always a demand for first time home buyers trying to get into the market. I think that there's going to be more volatility in like the 600,000 to a million range. And I think that that's where we'll see the biggest price drops. Now, the thing that trumps all of that is always going to be based on location. If you've got a property that's in a great location, it's going to be well insulated from any type of correction, right? If you've got a prime property, let's say it's on a golf course, or it's got amazing views, or it's next to a lake or a park, or it's just in a great overall neighborhood, then definitely that's going to be insulated more than just a property that's out in the middle, of a suburb with nothing special about it, right? So some of those areas that I think are going to be well insulated are going to be most of the cities on the south end, and anything that's really close to downtown in some of the prime real estate locations. So just to name off a couple areas, you've got like downtown Salt Lake. A couple of popular areas are 9th and 9th neighborhood. You've got the Harvard Yale neighborhood. Anything next to the university, I think, will remain very strong. You've got Olympus Cove, which is in Mill Creek, which I think will remain very strong. Sandy, probably the south end of Sandy and Draper, as well as South Jordan, Daybreak, Harriman, some parts of Bluffdale. I think those areas are going to be more insulated just because they're in such a good area. Schools are great. A lot of people there have high incomes. And if they're looking to buy, they'll be willing to pay a higher price. Or let's say that the market corrects, there's a recession or something like that happens. Those people who generally have higher incomes are going to be able to afford to continue paying their mortgage. And that's going to protect against the future downside that would be potentially out there in a market correction. So great question, Ben. I think anything on the south end of Salt Lake County is going to be good to go. I'm not too concerned about that. I think it'd be really well insulated. And then you've got those other cities or those other neighborhoods, Olympus Cove in Mill Creek, 9th and 9th, anything near the university, the Harvard, Yale, or Yale Crest area, I think will be really solid as well. So hopefully that's helpful there. All right. So any other questions, guys? Drop your questions down below. We'll continue on here. If you're thinking about making a move here to Salt Lake City, or if you already live here in the area, make sure to reach out to me. You can always find my information in the description box below here on this video or any of the other ones. I love hearing from you guys. I've had people from all across the world reach out, and it's pretty insane to hear about the stories of each individual person. I just had somebody reach out from Japan not too long ago. I had somebody reach out from Alaska. Tons of people from California, of course, New York, Boston, Philadelphia, Florida. There's been a lot of people out there reaching out, and I love hearing from you guys. It's awesome to see, what people are looking for when they're thinking about making a move here to Utah. And that also goes for, if you already live here in the area, I'd still love to help you. If you're looking at buying, selling, or investing in real estate, I'd love to be a resource for you. So just reach out. Let's have a conversation. Jeremy, I'm moving to this townhome complex called Station on 17th in Ogden. I don't know if it's West or North Ogden. What do you think of that area? That's a good question. I'm not super familiar with where that's located. Generally speaking, in my own personal opinion, I think that Ogden is one of those cities where you really have to kind of be careful what street you're on. And the thing that you have to keep in mind is you get what you pay for. So if you found a place and it's super cheap rent, well, that's probably because it's not a great place to live because it's kind of a rough neighborhood. If you found something that's nice, it's new, and it looks more appealing, then it's probably in a pretty decent area, and then that's a good thing about it is if you're renting, you might only be there for a year. If it is a bad area, you can get out of there and, move to a new place. So generally speaking, in my opinion, downtown Ogden is a little bit rough. Anything to just the immediate south side of downtown Ogden can be a little bit rough as well. So in Ogden, in my opinion, you either want to be really far south to get all the way to South Ogden, or you want to be really far north to get to North Ogden, or you want to be really far east up towards Weber State University, where it's a little bit nicer up there. So those would be the three areas Sorry, camera reset. Those would be the three areas I'd recommend as far as Ogden's concerned. Another question here, Anand. Is it still possible to break even on less than $500,000 property for long-term rental? That's a great question. This is with 25% down. So I was actually running some numbers earlier today on almost that exact scenario, looking at $500,000 house, renting it. With 25% down, you're probably right around break even. If you are paying for a property manager and you're accounting for vacancy and operating expenses, you're probably at break even or maybe just slightly under in today's market. So if you're looking at purchasing an investment property, I think you've got to be doing it for a couple of reasons. Either one, it's a slam dunk deal. Number two, it's because you need a tax break and you want to use it as a tax write-off. Or number three, you've just got some money burning a hole in your pocket and you need to place it somewhere. And maybe breaking even is not the end of the world. The fourth reason I just want to add in that I just thought of is if you've got money that you want to place and you're going to hold on to this for the long term, then sure, I think that could be a very viable option. It might still make sense for you to break even, but finding cash flow in today's market is extremely difficult and not really happening, to be totally honest. I mean, even with 25% down, you're not finding a ton of cash flow. You either got to put 30, 40, 50% down or buy it with cash to get any type of cash flow in today's market. I do think that will change. I have talked to a couple investors recently who are buying property and just saying, hey, I'm going to break even for a year, maybe 2 years, but I know that rents will go up. And I think, like I said earlier in the video, I think rents will go up pretty substantially over the next 12 to 18 months. And I think that's going to help investors who are looking at, trying to cash flow on some property. So that's kind of something that's good there. Yeah, Jeremy, I mean, if you're paying $2,200 a month in Ogden, it's got to be really nice, because that reminds me of like the prices that we see like in South Jordan or Sandy or Draper, that are really nice areas and typically more expensive. So yeah, if you're paying $2,200 a month, it's probably in a really good area. And like I said, very far north, very far south, or the east side of Ogden are generally the best areas. Anything kind of around downtown Ogden, I would personally stay away from it, especially if you got kids. That's something that I think is a little bit, that's what you want to know about Ogden. Question here. Do you think it's possible to break even doing short-term rental in Park City? Yeah. So a couple things to note about that. I've had a couple people reach out about short-term rentals in Park City. The first thing that you have to know is it's very difficult to find a property that's approved for this type of thing. A lot of the condos and townhomes and even just regular houses up there are going to have HOAs that do not allow short-term rentals. So that's your first hurdle. Let's say that you do find a place that does allow short-term rentals. Well, then you're going to be faced with prices that are so high that it can be very difficult to actually cash flow and make some money on a short-term rental. That being said, again, it's very seasonal as well. In the winter, you're going to crush it. You're probably going to make a ton of money. And then in the summer, it's going to be pretty quiet. You'll probably be empty for a half, maybe 2/3 of the month during the summer, just because it's going to be, a lot quieter. So you're going to make the bulk of your money in the winter doing short-term rentals, and you could probably make it worth it. It really depends on the property and how close it is to the ski resorts and what type of demand there is up there. I've not looked at short-term rentals as a host in Park City before, but I know that they'll range anywhere from $100 a night in the summer all the way to $500, $600, $700 for just like a 2-bedroom place in the winter. So it can get really expensive, which is good if you're the owner of the property, right? But generally you're paying such a high price that, it's a good option, but you've just got to be prepared for the type of market you're getting into. The other thing that I should mention on that, because I talked to somebody about a month ago about this, a lot of the short-term rental property managers in Park City will actually charge anywhere from 35 to 45% to manage your property. So if you make 10 grand a month, they're going to take $3,500 to $4,500 right off the top before they even pay any of your expenses, pay your mortgage, pay your utilities, or anything like that. And so it's really expensive, and it can be pretty cost prohibitive if you do it that way. So guys, I think that wraps up all of our questions. for the night. Thank you so much for joining me on this live video. I really appreciate all of the support from all of you. If you're thinking about making a move here, or you already live in the area, you want to buy, sell, or invest in real estate, reach out to me. I love hearing from you guys. And consider sharing this video with a friend or a family member. And don't forget to subscribe to the channel. If you haven't already subscribed to the channel, definitely make sure you do that. Anand, yeah, definitely get in touch with me. If you're looking for long-term rentals, let me know. Send me an email. That's the best way to get in touch with me. I'd love to chat with you and see what works for your situation and see if we can do something. One last question here as I was signing off from Derek. Let me just grab this real quick. So you got pushed more onto the sidelines than expected, but still looking to get out here and rent this summer and hopefully something. Yeah, absolutely, man. I mean, if you're getting out here, obviously the market has shifted quite a bit. So I think if you can get out here and start renting, that will be a good way to break into the market. And then that'll give you the opportunity to actually go out there and look at purchasing, when it makes a lot more sense for you. Hello from Colombia. See, this is crazy. I can't believe I get people here, from literally across the world watching my videos. I'm just some random guy here in Utah who likes to talk about real estate and sell real estate. So it's pretty crazy. Thank you so much for your support. I really appreciate it. Leo, I'm looking for a plot in a quieter area. I think Summit Park would be ideal, close to Salt Lake, but with less people and more nature. Yeah, that's a great idea, honestly. Summit Park is nice. It's right at the top of Parley's Canyon. You do get quite a bit of snow right there, and traffic can be a little bit crazy in the winter, but it's a great place to live. My wife actually has an aunt who lives in Summit Park, and they love it. It's easy to get to Salt Lake. It's quiet. It's definitely a mountain type feel, and you do get more nature up in that area. You get a lot of trees, you get a lot of brush, I don't want to say weeds, but you get a lot of like bushes and stuff that are just kind of natural. And you can even get deer like right in your front yard. So that's kind of cool. Summit Park is awesome. Definitely a great place to live. It can be a little bit expensive. I mean, you're looking 800,000-900,000, maybe even $1 million plus just for like an entry level home there in that area, but definitely an area that I think is worth considering. All I've seen so far near Summit Park are properties in some kind of condominium with a house project ready. My idea is to build my own house from scratch. Yeah. So if you're looking to build your own house from scratch, you can definitely do that. I mean, you just need to find a builder who can get you on the list. I was talking to a builder who builds in Park City and the surrounding area just maybe about 2 weeks ago. And they said they're actually booked out for 2.5 years on new construction projects in Park City. So that's how busy they are. That's how much demand there is. In that high-end luxury range, people now have more money than they've ever had in the past, and they're willing to spend it on these types of properties. So the luxury market right now in Park City is just absolutely crazy. Prices are super high, and it's kind of a crazy market. So yeah, guys, thank you so much for watching. I really appreciate everybody tuning in. I hope to do at least one live video like this, let's say once a month. That'd kind of be my goal. Feel free to share this video with a friend, a family member, your wife, your husband, your mom, whoever it might be. They might find some value in these videos as well. And as I was saying earlier, make sure to subscribe to the channel. We've got a lot of great videos coming up here in the next little bit. And I want to make sure that you stay up to date on everything we have coming out. So with all that said, guys, thanks for watching. We will catch you in the next one.